What's going on, guys? Good afternoon. Good afternoon, good afternoon, good afternoon. This is Ryan, aka Kenner Clark, and it is 12:06 p.m. Friday afternoon on December 4th. So, how's everybody doing? How is everybody doing? Can you guys hear me? Fuck, you can't hear me, can you? Now you can hear me. Damn. 1 second. The sound's gonna take a second. All right, let me just type that before everyone has a panic attack. It's on now. Okay. All right, sound should be good. Okay. So good afternoon, everybody. Good evening. Good afternoon. All I said was, what's going on? It's 12:06 p.m. now, New York time. Friday afternoon. Hopefully everyone is doing well. Everyone can hear me nice and clearly now, right? Just making sure that the sound is clear. I saw that my mute button was off on my mic, but unfortunately I had it. Where's my watch? I had it with the Apple Watch today. Oh, is it dead? No, it's not dead. Oh, you could hear even before. Does it sound like there's an echo now, or does it sound good? So fucking weird. I don't know what the hell this is. Yeah, I did, Okomianda. Can you guys just give me the little sit rep on what's going on with the sound? Is it is there like an echo? Is it robotic, or does it sound good? Sound wasn't muted. Weird. All right. I don't know what's going on with that. Like the OBS, I noticed that I had the audio input capture turned off. And echo still. There's an echo now. Okay. So let's do away with that. Okay. So I think it's like if I have two, I don't even know. I'm not even going to, I'm not even going to try to guess. Okay. Fixed it. All right. A little bit of an echo. So we'll let this kind of sort itself out. There's obviously there's a lag. So we'll let that sort itself out and then get to saying what's up to everybody. We have a good amount of viewers in the stream. We have a lot of people. That's good. But, guys, if you are going to be stepping in my stream, make sure you hit my like button, okay? It's like when you walk in, make sure you leave your shoes and your hat at the door, even though that's not the kind of house that we run, right? You don't have to take your shoes off at the door in my house. Unless you're just stepping in from the paddocks, which are covered in horse urine, and then you have to absolutely take your fucking shoes off before you walk in. All right. Cool. Okay. So we have a good amount of viewers, but I'm going to need those likes to amp up. So hit the like button. I hate to say that, but it is what it is, right? You want us to keep doing these YouTube videos. I'm not holding that over your head, but I want to keep doing them too. And, there is a little bit of a feedback mechanism or feedback loop that occurs when you hit the like button and our stream gets prioritized. So then we're further incentivized to keep up, the no's and, the non-sensational crypto trading analysis. And we do this 3 days a week, and we want to keep doing it. And, it's a little bit of what is it? It's like you're giving us a little bit of a reward, right? Those likes are the hit of dopamine that I require as a person to go about the rest of my day feeling fulfilled, because my entire life is built around that feedback loop. Just kidding. But yeah, it is what it is, guys. That's the rules. You walk in, you hit the like button. Okay, you say hi to me, you hit the like button. All right, I'll stop being ridiculous. Okay. So, how is everybody doing? We're not gonna hold you hostage for long. The stream's not gonna be too long. I'm gonna try to keep it around an hour, which means we're not gonna, go off on tangents. We're gonna be pretty direct. We're gonna take a look at BTC. We're gonna take a look at some alts. Yeah, and then I'm gonna talk about the COT report, which I think is really important because I've referenced the Commitment of Traders report countless times, and I always put emphasis on one particular entity on that. Right? And it's not the leverage funds, it's not the fast money. So I really want to go over that because I think that a lot of people are looking at that and thinking that they're getting like a directional cue as to what is to be expected in the market. And it has to do with like the whole perception of smart money. So what we're going to do is we're going to demystify that, and we're going to, wipe that slate clean, and hopefully be able to send you out there so that when someone shares this chart, you can say, dude, you don't know what you're talking about. All right, come on. Which is how I feel all day. That's how I feel all day when I'm on crypto Twitter. Half the time I'm just like, dude, how'd you get so many followers, man? How'd you get so many followers? It sounds like you just got out of the trading aisle in Barnes and Noble. Okay. All right. So everyone is doing well. We have a good amount of likes. It is what it is. It's where the ratio is a little bit better now. All right. If I didn't introduce myself, I don't think I did. Actually, I did, but I thought you guys didn't hear me. My name is Ryan, aka Canner and Clark. My partner is Josh Rager. You follow us on Twitter. All right, Canner and Clark and Josh _, I think it's called Rager. Rager, and we are the co-founders of BlockRoots. So BlockRoots.com. We have an incredible learning platform, a ton of resources, a ton of educational videos. We get very specific into order flow and market profile, which is my specialty. So we are partners with Phemex, and we try to throw this in there in the videos, but we don't want to ever be kind of overbearing or we always have to touch on our sponsor. The one thing that is good is, Phemex is not sponsoring these videos, right? We're not like, we have a partnership with them. There's no specific agreement that they're sponsoring the videos whatsoever. Josh and I pretty much are, we are the buck stops with us. Okay. So this is a platform that we partnered with, of our own volition. We think that it is a phenomenal trading platform. If you go to, I put the link up, Phemex.trade. What that does is give you a certain percentage off of your trading fees. And the reward structure is always changing, right? Right now, they're doing a giveaway for a Tesla. By all means, take your shot. I got to say there's a non-zero chance that you can win, right? That just means that, yeah, there's a possibility. When you go play a scratch-off ticket, do you think that, your chances are high? Well, maybe if you're a complete moron and you keep going to 7-Eleven every day playing scratch-offs. But you know how this works, right? But they are doing plenty of giveaways where if you sign up and all it is, it's a max giveaway of, I think, $500 to $600 at times. And you know how that works. It depends on how much you're actually going to deposit. So like I say, non-sensational, completely honest and upfront. If you deposit the bare minimum, you get, the bare minimum deposit into your account. And what you have to think about this is, or how you have to think of this is, trading is expensive. A lot of people don't even realize how much their style of trading might be eating into their trading, right? Their cost of trading, okay? And transaction costs are a real thing. If I look back on my trading performance throughout the years, if I showed you my transaction costs alone, things that, are just the cost of doing business, it would blow your fucking minds, okay? And, I feel like there's a lot of traders on Twitter who they throw this around. And it's kind of like a braggadocious thing to say. Like when you're talking shit to someone, it's like, dude, my trading fees are more than, your yearly salary. Like shit like that, okay? But the trading fees are pretty astronomical. And you ideally are making money on top of that so that is incorporated and, you know about that in advance, or at least you're planning for that in advance or making room for it, right? And it fits in your system. But, for new traders, trading fees, if you enter in a trade and you take a two-way trip, or if you take a round trip, right, enter and exit and use a market order and you're paying the spread and then you're paying the fee, like if you're trading in a small range, you better have a high hit rate, positive expected value. You better have a really good set of conditions that give you that little window you're capturing after you've already paid, and this example is, the most extreme example, which is using, 2 market orders for entry and exit, incorporating slippage, worst case scenario. But you better have a good setup because that trade might end up leaving you in the red, even though everything else looked good on paper, right? Entry was good, exit would look good. Where did I lose money? Oh, I lost money because of the fees and the slippage. So, things don't exist like they do in theory where you're looking at a trading view chart and, it's just slap an RR tool on this and that's how trading works. That's not how it works. Okay. Transaction costs are the real deal, especially if you are a scalper. Okay. If you're a scalper, you are transaction cost sensitive. So if you use this link, you'll get a discount and you'll get a certain amount of money deposited into your account. And I'm going to say this right now. It's not like, oh, I deposit, and all the exchanges do this. Okay. And we know what they want. They want you to come on and trade the same way the competitions work. Okay, they know, they've already figured this out. It's not like I wonder if this is going to bring more money at the end of the month or if we're going to lose money. They've already figured this out. Okay, it's like a casino. That's the way exchanges work, right? There are certain people that can walk into a casino and they go to the blackjack table and they clean up. And 99.9% of people that walk into a casino, okay, they walk to the slot machine and they lose their kids' college education. And that's not that funny because it's a reality, right? People are, destroying their lives gambling, and people do that in trading too. And there's something that's a sickness in everybody that has people coming back even after they've been raked across the coals, and that is what actually ends up helping you hopefully break free of that. It's like you finally get to the point where you're like, just screw this. I'm tired of losing. I'm going to improve, or I'm just going to quit, right? So that's why trading has the attrition rate that it does. But these exchanges know we're going to give you. Let's say that you deposit, if your account balance, right, if you're coming to the exchange with, let's just say that, they'll give you $600 if you deposit 50 grand, right? I mean, that's nothing, right? If you're depositing 50 grand, if I'm trading and I'm trading with a position size of 500,000 contracts, depending on slippage, I might be paying upwards of, and this is just, not fees alone, adding slippage into this. If I'm using market orders, that trip can be anywhere from, $300 to $700. Okay, depending on if I'm using 300,000 to 500,000 contracts. Obviously, this goes up the higher up you go, but they know like the money that they give you is going to come right back to them. It's going to be your trading fee money. So don't go to an exchange and expect that I'm going to go to Phemex.trade, I'm going to sign up, and then I'm going to get this money, and then see you later. I'm going to pull that money off. That's not how it works. This money is toward your trading fees. And if you're actually trading, you're going to see the benefit in this. Okay, if you're just trying to like catch a deal, then you're probably not at the level you should be at anyway, right? Because you haven't figured out how this works. Okay, so go to Famex.trade. Okay, this is a platform that I've done. I do a majority of my DeFi alt trading on now. It's the best execution there is for platforms. Like I said, the numbers don't lie. When you are looking at this exchange next to something like Bybit lately, you're going to see that the levels of volume and open interest are less on Phemex. So it is what it is, right? You're going to have a little bit less liquidity, okay? And depending on what your size is, that might become relevant at some point, or it might not be relevant to you. So just keeping things as transparent and honest as possible, okay? I don't know. I'm in a position where I don't have to worry about that. So I am always going to be honest with you guys. Okay. So we have a good amount of people in here. That's great. I think we should bang out the lesson first. Okay, so what's going on, guys? I got a lot of people. All right, Pascal, Cornholio, David, Kenny, X Factor, hi, Julin, Kilgore, Danny, Bernard. Okay, all right. What's good at Comienda? Yeah, Comienda, I gave away the reward. Gave that away. Someone lucky won that. What's up, Ty? How's it going, man? Will I am Cryptic Ash. Only Ty knows why I'm laughing. Alexander, okay. David, JR, all right. So cool. I want to say hi to every one of you guys, but you do yourself a favor by attracting the hi even better if you give me more than a hello. No, I'm teasing. Okay, it's an OBS issue with sound settings. Probably have yeah, I think it's so weird because sometimes it's like a ghost in the machine thing, honestly. Luke, I don't change the OBS settings ever, and maybe it's like I'm not sick. I don't know. I never change the settings. Like sometimes it just happens, sometimes it doesn't. I don't change anything in between. I hit the X or I make the X go away, and it's just like it's this right here. It's this. That's all I do. I make that go away. Okay. All right. Good to go. All right. Instruction. All right. What up, Dave? What's going on, man? Keld, Sweet Canary. Okay. So this is what we're gonna do. There is a popular chart that is shared quite often. We're gonna take a look at this. All right. This was shared by Crypto Orca. Okay, he's been on for a really long time, since 2009. He has over 100,000 followers. Okay, so Crypto Orca This is nothing against him. This is like something that, you know, has been the case for a really long time with a lot of people, and it's not their mistake, right? It's just a misunderstanding of how this works or what actually is at play. So sharing the CME chart. So I guess it's a better idea if I just hold on one second. Oh, I guess I could just type it here. Commitment traders COT. Oh, commitment of traders, and then I type COT. We'll go to bar chart. All right. Okay, so commitment to traders, right? We're looking at futures. So we go to Bitcoin. All right, so now we have the commitment to traders. So this is a commitment to traders report put out every single week. This is showing the breakdown of positions held on the CME. And it's broken down by dealers, asset managers, leverage funds, you know, your hedgers, your, you know, speculators, your small money, your big money. So people look at this quite often with Bitcoin. And every time that I've looked at it and referenced it, the most important thing to me, okay, is the asset managers, the large asset managers. So if we're looking at this chart down here, okay, you could sort of see it. This chart is not flexible. Like I can't zoom in and out of this one. I know there's other commitment to traders reports on. You could just go right to the CME, but it's not like, you know, going on to TradingView. You can actually, there's an indicator on TradingView, I'm pretty sure, but we're just going to stick on this. So we could see asset manager, and that's that green line right there. That's the one that I care about, okay? So the CME is going to attract a lot of your traditional finance, you know, legacy people that do not want to be on a crypto native exchange. They have the capital. They probably have, you know, larger size than your normal crypto native exchange trader. This is for obvious reasons. You know, there's certain margin requirements to trade on the CME. There's certain access restrictions depending on what your broker allows for. Most people can access this as long as they have a certain amount of margin that's approved, or they're approved for it rather. But this is, you know, this is sort of a filtered view at larger money, right? You don't have small traders trading on the CME. You typically have larger participants here. You know, it tends to attract those participants because, you know, there is a filter, right? There's, you know, your retail speculator can go on to Coinbase and buy Bitcoin for $80. They could go on to Coinbase, they could put $80, you know, they could buy $100 worth of Bitcoin, send that $100 worth of Bitcoin to BitMEX or Bybit or Phemex, and they could lever that up to be a notional position of, you know, $80,000. And they'll use 100 times leverage, okay? Now, their margin requirement for that position is 1%, right, to open up that position, their initial margin. So for the CME, the initial margin is, the margin to maintain a position is 33%, okay? So each contract is 5 BTC, so it's not like in the, you know, perpetual swaps where it's one contract is, you know, $1. And then that is why there's convexity in perpetual swaps, because as the, you know, price of Bitcoin goes up and down, that contract value is going to fluctuate, right? You know, whenever Bitcoin is priced lower than $1, okay, one contract is going to be worth more than, you know, when Bitcoin is, or excuse me, it's the inverse. When, depending on how high or low Bitcoin is, the contract value is going to change. So it's always going to be 1-to-1 though, right? So one contract, that's how it's created on, that's how the swap is structured. This is in USD, right? So this is not an inverse swap. This is just a linear futures contract. Now, this is, like I said, it is an indication of larger money. But the problem is there are people that look at the CME and they just think immediately smart money, okay? They think immediately smart money. They think that, you know, there's some level of informed, there's some level of information. Let's just say there's a difference in the information that these participants have that maybe the, you know, crypto native participants have. When I say crypto native, I'm talking about like retail participants. Even though you could consider people on here retail, right? Depending on, you know, if they're for an institution or if they're an individual trader on the CME or trading through the CME. But still, it's the thing that is, I guess, the incorrect assumption of this is when people look at leverage funds. So let me get right to it, right? Without getting into all the nitty gritty about this. So leverage funds, okay, that is your fast money. So fast money, hedge funds, people who are not really, you know, buying and holding for the long run, people who are turning over a lot. You could think of, you know, a leverage fund would be someone like, James Simons, right? Renaissance getting involved in crypto and trading, high frequency trading, lower trading more frequently than someone like maybe Paul Tudor Jones, who is more of a swing trader, sort of a buy and hold type of approach to the market, right? So we know immediately there's two different larger participants in the market that have two completely different approaches. So your leverage fund, you could consider Paul Tudor Jones like a leverage fund, a hedge fund manager, macro trader, but the leverage funds it's going to be your fast money for the most part, and most of their focus is on the front month. They're not, buying positions, and they, excuse me, I don't want to say they're not, because that's incorrect. Just think of it as faster money. And when I say fast money, meaning that they're frequently getting in and out of positions. They're not holding these positions like they would be taking spot Bitcoin off the market. It's the futures market, and you would have to roll futures. So asset managers are your long only pension fund. Think of an asset manager, and this is not exactly what we have in the case of Bitcoin yet. It's what we want. You want more of these participants, right? You want more pension funds, sovereign wealth funds, if there are any. You want long only people, right? Because they don't have any interest other than upside. Okay, they are buying and holding. They are, getting involved on the CME due to certain fears with security and counterparty risk and custody, and they're like, okay, this CME is the most, CME is the most regulated exchange in the world. So I'll buy it through the CME, and I'll, use futures, and I'll pick up a futures position and roll it for the long run, right? Or I'll take a futures position further out, which wouldn't make a lot of sense because the market is always in contango, even though over time the prices have probably more than made up for that. So leverage funds are, for the most part, always short, right? We've seen leverage funds for a really long time now being short, okay? So this is not, and this is where the mistake is made. This is not a directional, this is not a hint as to like, or an advertisement as to directional funds, hedge funds, fast money being outright directionally biased towards the short side. This is not, alpha that is like in plain sight where it's, okay, now we know that all the hedge funds, which the connotation is that the hedge funds are smart money and informed money. Now we know that they're all short. Like, what do we not know that they know? Smart money. They're not. They're the same people as you. Like, they operate off the same behavioral biases. They pretty much don't differ that much. Okay, they don't. There's no major So there are people in crypto that are crypto native traders, that are crypto native fund managers that don't trade on the CME, that have more access to, that really useful that really useful information asymmetry that people on the CME don't, right? That these traditional fast money folks on the CME don't. So this by no means is a representation of like informed money who is short Bitcoin because they think the market is going to have a major pullback. And someone said, or it might have been Crypto Worker said that they've been building a short since 10K. That's not how it works. No one on the CME has been building a short since 10K and holding it now. Okay, the short side of this kind of market is a really dumb one to take. I take it on the short term. But for me, it's not smart because, one, I'm just so structurally long BTC anyway. It's when I open a short, it's more like a hedge. I'm never making more than I already am making by being exposed long. Unless I increase my exposure beyond my portfolio size, at that point I'm just hedging, right? Because it's always up to the point of being one-to-one with my portfolio. And I don't even do that when I open up a short. Sometimes it'll just be to, limit the downside, take advantage of some activity, right? But there's no one on the CME who is overexposed to the short side of things. Or there might be, but they're blown out by this point, right? They'd be blown out of their position if they're opening up a short at 10K. So what they're doing is, if you look at the CME contracts, so we'll just go to BTC, and here we have the CME contracts, right? So here's the CME contracts currently. This is front month. All right, so you have, if you go to TradingView, and I have direct access to the CME on Sierra. So if we just pull up Sierra right now, you'll see the updated. So I know we don't even really need to because the delay is probably like 5 minutes, but I just didn't fix my TradingView account after I lost my wallet and had to replace all my cards. So CME for 1 month, and you'll see that right now it's trading at, is this downloaded? Okay, so right now it's at 120, and on the exchange it's at 1980. So it's at 120 right now. So this is trading at a premium to spot, right? It's a decent sized premium. If you were just looking at spot, for example, right now, we go to like Coinbase, spot's at 19,000. 19,120 it's a small basis, but it's a 66 basis point basis. So there are a lot of times when the CME is trading at a pretty considerable premium, more often than not, to the spot market, to product like GBTC, okay? So leverage funds are not outright short the futures contracts. What they're doing is taking advantage of a carry trade or a basis trade. It's where you sell a futures contract that's trading at a premium to spot, and you buy the underlying spot. All right. And what happens is over time, if a market is in contango, the prices are going to converge with the spot price, and that would look like, so a market in contango would look like this. So if this is the current spot price, and this is like 19K, all right, and this is the futures term structure over time, your market in contango would look like this. So this is 19K down here. Let's just say this is 20, and then this is like 21. I should take my pen out. Every time I do this, I think of that. 22, right? Market in contango. Over the course of the futures term structure, let's say like January, February, March, April, prices are upward sloping, okay? Now, there's a lot of demand for Bitcoin, right? It's not like, and there's a premium built into this. It's not like there is a cost of carry with Bitcoin, whereas in traditional futures markets, it's like if you want to buy, if you're gonna make it, get into an agreement to buy or sell, let's say buy corn at a future date. Like I want to buy corn in July. Well, I want to buy it in July. I want to lock in that price now, but I don't want to receive delivery. I want you to hold on to it for me. I want you to insure it for me. I don't want you to sell it to anybody else. So that's going to trade at that premium. It's going to have that cost of carry, right? Because the person who is not selling it immediately is giving up on the opportunity to sell it at current market price. They're paying to store it. They're paying to insure it. They're paying that opportunity cost, like I mentioned. So futures are typically traded at a premium. Most markets will spend majority of their time at a premium. The opposite is at a market in backwardation where they're trading at a discount. So premium is when they're trading in contango. So the futures curve is upward sloping. There's no cost of carry in Bitcoin, right? There's no supply shock that's going to really occur. There's no cost to insure it. There's none of this. The only thing that you're paying for, right, is if you think about, you're paying for the lack of counterparty risk if you're using something like CME futures. So you could think of a few reasons why a premium is baked into it. Either way, over time, a futures market, so if this is the current spot price trading down here, even though the market in contango looks like this from, forward looking, what happens is over time it does this. So it comes down. So the spot converges with the futures. Okay, so this is essentially where the concept of roll yield comes in. So if you have a market in backwardation, it's going to roll up to the spot price. If you have a market in this is both F, so I don't know why. This is contango, sorry. If you have a market in contango, it's going to roll down to the spot price, okay? So there are people that take advantage of this carry trade when the market is trading in contango, right? So they'll buy spot at 19K, they lock in that, and they'll sell the same amount of futures contracts at, 22K. And now the market moves up, okay? They make money on the spot, the market rolls down. Over time, they compress. They're making money. They're capturing this basis, and it's sort of like a free lunch. Now, obviously, there are certain limitations. You have to optimize this trade. You have to think about getting into the trade effectively, getting out of the trade effectively, but it's kind of like a free lunch. And in crypto, it was, crypto native exchanges, their linear futures contracts, for a while, like the annualized basis from some of those trades would be pretty astronomical compared to what yield you can get in traditional markets. And it's, again, a free lunch. Imagine getting like 12% on your capital for nothing. Like that is something that is outside of crypto. We take that for granted in crypto because you're like 12%, like that's nothing. I could get 12% on my altcoin right now. And people in traditional markets are like, 12% is nothing? What are you kidding me? I'm trying to beat the S&P every single year by a point just to keep my job, right? So what they're doing, what traditional market players are doing through the CME is they're buying, they might be buying spot Bitcoin, right? So, and a lot of people are probably, a lot of traditional funds, a lot of traditional money managers they're using a product that's available on an exchange, like a GBTC. They're using Grayscale's product. Okay, they for one, it's like if they were going to buy spot Bitcoin, that is a ton of paperwork. And if you're like a registered investment advisor, you have to have that for every single person, right? You have 200 people under you. That means that you have to have that new paperwork, that new documentation, all of this new plumbing built in just to custody crypto. Like, why not just buy it on, why not just buy GBTC, right? An exchange listed product, which is like it's kind of like an ETF right now. It's not an ETF, but it's kind of the closest thing you have to it. So what they're doing is they're buying, something like GBTC, they're selling futures contracts, and they're capturing this small little window that's going to converge on itself, right? The spot market's going to rise, the futures market is going to roll down, or, the spot market rises either way, and the future market, over time, everything rises and however it converges, no matter what, over time, this difference should be arbed away, okay? And it's, again, I keep saying it's like a free lunch, and that's really the best way to think about it, but I don't want to say that because I don't want you guys to go on and just place one and then fuck it up because you don't optimize in your entry and your exit. And then, you turn a 5% trade into a 1% trade or 2% trade because you destroy that ARB opportunity. So that's what they're doing. That's basically what they're doing. They are literally just taking advantage of this carry trade nonstop because it's a free lunch. That's all. Traditional market players are all over this because they're looking at it like, you guys are so preoccupied with, your shit coins. I'm sure they're not really thinking this in these terms, but for them, it's like they are constantly, if you're a traditional money manager, if you're a fund manager and you're seeking absolute returns, or you're even trying to beat a benchmark and looking for relative returns, anything like this is, anything that sounds like a free lunch, that's just unheard of, right? That is, these guys fight tooth and nail over the littlest bit of alpha, right? This is like an ever receding pocket in traditional markets. The concept of alpha, and then it decays over time very quickly. So you can imagine there is this arms race to find that in traditional markets. So now that it's kind of sitting on a silver platter in crypto, and you have this product that is on the CME, and it's like, okay, that's regulated, like we're cool. And then you have GBTC. All right, that's like as closest to the spot Bitcoin that as I can get. It moves with spot Bitcoin. I'm going to capture this yield, right? I'm going to capture this basis yield. It's easy as long as I execute the trade properly. So that's all that is. This is not a fucking, like people share this chart and they're like, oh my God. It's Casual Friday, as you can tell. Oh, I think Craig calls his stream Casual Friday. I got my hat on backwards. I had the weird music in the beginning. I just found it. It sounded like music like when you walk into a New York City club at 1 o'clock in the morning. You go through like the drainage stairwell, and it's like, it reminds me of going to clubs when I was young, and it's like weird techno Russian music. That's what was I saying? People share the commitment to traders chart as if it's like because I feel like there is this feeling that like, oh, not a lot of people, this is kind of obscure to a lot of people who are in crypto. So like, I went the extra mile and found data, info on the CME website. This is the smart money. They're shorting Bitcoin. No, they're not shorting Bitcoin. The most important thing that you should pay attention to that is not deceiving is the long only asset managers. Asset managers institutional green line right here. The fact that it is ticking up, okay, is what you should be paying attention to. Why? Because long-only funds, they're only interested in taking supply. That's just, consider it like that, okay? They are interested in taking supply off the market. They're not hitting the red button. They're not capturing that basis yield, which is not a bad thing either way, right? It's not a bad thing. It's just a free lunch. So that's that, guys. Know these things, right? There's so many things so the purpose of I know the progression, right? You come into trading, you read the TA 101 books, you learn a little bit, and you got it all figured out. The purpose of educating yourself and having academic approach to things, and being really education first, is so that you can go through life and not be fooled, right? you look at things and you do not entertain them unless they're backed by evidence. And when you see, if you learn enough about markets, you're going to go to CT every day, and you're going to have enough for a comedy skit for the next few hours for the rest of your day. You go to CT, you log on at 8 o'clock in the morning, you get your trading done, you get your observation done, and you'll have material all day to laugh at. Once you learn a little bit about, just a little bit more than what you know, because you'll see things like this shared, and you'll just be like, well, dude, what the hell are you talking about? So yeah. So yes, yes, yes. Okay. All right. Weird Russian techno. I don't remember, honestly, Jake and Muscles. I don't remember. I used to go to like, so long story short, when I was younger, so this is New York City. I didn't live in New York City, but one of my closer friends, group of friends, grew up together forever. One of my closest friends, his dad is the, don't want to give away too much. One of my closest friends, his dad owned a carting company in New York City. Now, my grandfather owned a sanitation company from, I won't get into specific states, but similar backgrounds. His dad owned a carting company in Manhattan. He had so not my grandfather who was in the commodities industry, or who was I mentioned my other grandfather, and I said that I learned a lot from my grandfather and that he was a big commodities guy. I'm talking about my dad's dad. So my dad's dad is, he's still alive. But friend Vinny, when I was 18 years old, 19 years old, 20 years old, up until all through college, his dad owned a carting company. I think they still operate in Manhattan. And Vin had a black card, right? Vin had a black card when he was 18 years old. So Amex black card. This is going to get, I'm going to segue. I know this is terrible. Amex black card, you know what that is, right? It's, you have to spend, $2 million a year, whatever, the metal card. Everyone makes a fucking metal card now. It's no longer like this. It's no longer like a signaling. It is a signaling mechanism. You see a black card, it's like, okay, that guy is a heavy hitter to some degree. Or if it's a black card, but it's a business black card, they might just have their line of credit on that card. So if it's a personal black card, it's a little different. So he had a black card at 18. So what that meant was we would go to the clubs, and the black card had a concierge service. So this is no joke whatsoever. Concierge service, you call Amex, you get a car, all right? The car would pick us up, and he lived in Garden City. No, he lived in Great Neck, which is in Nassau County, Long Island. The car would pick us up at his house. It was, and they'd send you, it was a black Escalade. So, or he had it sent, who knows if they did that or if that was part of his deal, whatever. So we would get taken to the clubs at 18 in a black Escalade, get dropped off. We would go to Crowbar, we would go to Pasha, and then we would get ferried right to the front, because it would be, okay, he would call the Amex again. Okay, we're here. Okay, give us 1 second, Mr. I was about to say his fucking last name. He would say, we're here. And then they would call the club. They would say, we have a very important person here. The people would come to the door. Then we would get taken to the VIP section. So this completely ruined my nightlife experience when I was young. I could care less about nightlife now. But my first taste of nightlife was like that kind of level experience for every single week, while I was in college, minus a few weeks. Now, I wasn't in college. I wasn't like I wouldn't go and drink, do crazy shit like that whatsoever. But it was just part of going out. Like, you go out with your boys. And that ruined everything because, by then, like, you've had the best experience you could possibly have. Like, what am I going to go do now? Wait on a line and be smushed like sardines on a club floor. We would be like in Crowbar, and they had this center area that we would sit, and you'd be elevated. It was just a poor way to start things, put it that way. It was like raising the bar way too high. But guess what? Now I could give a shit about going to clubs. I actually don't give a shit about going out at all. You know what I like to do? Hang out with my wife. Okay, let's get into the meat, right? Because we are going off, but it's Friday. We're gonna, I like kind of talking about my personal life. I like kind of letting you guys in and telling stories, and I got a fucking ton of them. But I think we have to think people here for the trading too. So Phemex done, COT done. We understand that. Let's look at some good signs first. So good signs. Okay, great signs that I really want to see. I want to see that we're getting aggressiveness coming into the market finally towards the downside. right? So what I'm most interested in is actually that the market starts selling hard. As long as we're selling hard and we continuously find this floor, right? I don't want to see any kind of slippery candles to the downside. I don't want to see anything that doesn't look controlled. When I say controlled, I like to see that we get these, $300-$400 moves that are abruptly stopped. And then you get the consistent selling into the low, and ideally, and it was going predicted negative for the entire morning, ideally you have this negative or neutral funding rate. So if we look at, I have the Coinbase basis and the MEX basis right now, and when this is trading above, this is an indication that Coinbase is trading at a premium. So ideally we want to see this start to go more positive. This is a free indicator, by the way. Mohit put it out. He's a really well-known guy on Twitter. DM me, I'll give it to you. But this right here is an indication of the premium index being negative, which is what we always want to see when we're looking for a bottom. So fingers crossed, we're starting to see signs that, and it's hard to understand this if you're new, but you want the market to sell off before it can move higher, right? Or sometimes it's said the market needs to sell off. I took a short last night, and it's like I've been saying for the last week, and I tell you guys all the time. I tell you, and I try to reinforce this as much as possible, and this is why I don't share everything all the time. Like, you will not be able to keep up with my pace in terms of trading. And myself, like Stanley Druckenmiller has as well, I can change my mind. Let me make this so that I'll get the Sierra chart out of the way. I could change my mind in a matter of hours and have the utmost conviction about my decision, hit the button, and a lot of the times I feel like when I do change my mind, I end up being right. So there needs to be a really good reason. But I've been saying for the last few videos, like, I don't want to short this. I don't want to short this. I can't, it's hard to define my risk, right? How am I going to define my risk, even though structurally this area is a good time, good place to do it, technically speaking, right? Theoretically speaking. But if I place a stop up here, right? If I place a stop up here, or if in this case, having placed a stop back here above the highest daily close, if I place that stop up there, like what are the chances I get stopped there? That's if I just use a market stop. So there are ways around this, and I don't like to often mention these because it just creates poor habits. But if, let's just say you're creating your stop, right? You have your market stop up here, and you use a market stop, right? You want it to absolutely be executed because the last thing you want to do is be stuck in a trade that breaks the all-time high again and be short. So you want this to be executed by all means. You have a market stop. So if the market comes into this high and you get, you hit that market order, that sell turns into a buy. Well, at the point of the market coming back up here, there's a really good chance every time we test it that the next one's going to be a big break, right? We say that kind of ad nauseum, but that's the way it is. Like, we're kind of in that weird spot where everyone's anticipating it a lot sooner, but it's very likely that it's going to come. So your stop gets your stop gets hit here, but your trade doesn't execute until all the way. It doesn't clean out until 2400, right? 2600. So you experience a ton of slippage. So it's like not the best trade setup, right? But what you can do, I don't advise doing this if you're not, if you're not more advanced, is, and that's silly because you can just figure this out and it'll make sense. You can use your liquidation level for an isolated margin position as a stop, right? And put your stop slightly before that mark price so that you might save your maintenance margin. But if you're liquidated, it cannot cause any slippage, right? You're just liquidated for the position. So you could fit this into, depending on the amount of risk you're taking for the trade, you could fit this actually into a good trade setup, right? Where like, I'll be liquidated, that'll be my stop. But I'm using isolated margin. I have this all sort of measured out to begin with. So it's very, very much predefined, all right? But there's just been I don't know how to describe this. Everywhere I go, I just see like people prepping the table for the all-time high, like putting their finest suit on, celebrating it before it's happened. So what I think is, okay, now so before we broke the all-time high, like inched above it, we had media recognition, right? So we had it. You have new people coming into the market. You have all of us that are like, I think the all-time high is going to be broken soon. All right, different variant. There's variance between, you know, levels of magnitude, right? Um, there's some people, you know, I was like, I don't know if we break to 22 or if we just crest over, right? No one knows. But everyone was kind of on that boat. Now you broke the all-time high, okay? You are all over the media. So now technically there should be more longs in the market, right? There are actually more longs in the market. There's a lot more confidence on the part of people that it's okay if I become blurry. Don't let me just. It's not me that you have to worry about, guys. Let's reset this. So now the market is by all means like it has more long participation in it. You and I long, you know, all of us kind of structurally long. And guess what? The market is not doing a really good job of nuking upward anymore. It's like everyone's coming in and buying, but why is the price staying here? Well, it is that I think, you know, what we've seen, and I've mentioned this, is that the spot market has kind of pulled off a little bit, right? The spot market has lost a little bit of momentum, which is completely normal. But for those of us that are already exposed to spot, we have our spot Bitcoin, we're able to actually take that spot and go, well, I'm already long over here. I'm going to go long again. So you could go to a derivatives exchange and you can get long. Now, your spot market is below. It's not picking up pace. You're on the derivatives market now. You're longing and adding more pressure at the highs. But again, we're seeing increased pressure at the high and no more follow through, right? There's no real major advance in price. So the market has become structurally very heavy. And as far as the eye can see, I can't even really find a bear that isn't just a complete absolute moron, right? There are bears that now they still exist, but it's like, dude, everyone knows not to even pay attention to that guy anymore. He's not even a switched bear at this point. There are bears I know that switch to long, right? So as far as the market can see, you've pulled all types of participants in, and now, even though you have all of that in, the market is actually moving less than it did prior. So it's a heavy market, okay? So for me to not look for the short opportunity, knowing, okay, I can actually get away with tagging on a position here. I could just be liquidated with the position, have it on isolated margin. And what I'll do is I'll place my stop above the highest daily close. And from that point, I'll target the lows. Okay, so a tight trade, by all means, a tight trade. I actually added to this trade, right? So I added to this trade and I woke up this morning and I honestly was happy to go to bed on this. I was like, I just feel like there's no way that we are going to squeeze upward. We can't do it right now. The market has no push, all right? It needs to sell off. So it needs to sell off because you need people to go, actually, we're all wrong about this. Yeah, this doesn't make sense. Yeah, the market does need a 30%. You just, all this kind of, the wheels start turning. And you don't have to think like, I wonder if they're thinking this. People tell you their positions. And I don't mean, you know, outright by Twitter, right? The market's telling you people's position by how they're positioned on the futures market. It's one of the first signs you can see. So are we seeing the futures term structure begin to compress? Nah, not really. The market is still structurally very long. It's going to be a market in contango for a long time. But the perpetual swaps, are we seeing that funding rate has come down as prices move sideways? Okay, as prices move sideways, it's been in this compression. It hasn't made a new high or new low. It's been funneling. And guess what, though? Over time, the funding rate has been dropping. Good sign. Okay. So we have seen this increased selling pressure as the market has moved from left to right. And yet the market, you know, the same way we're saying the market was long and it wasn't moving upward. Well, now we're getting that increased exposure on the short side. We're not seeing spot sell off really. So it's not now the spot following the futures market. If anything, actually, what we're seeing is the spot is holding. So if we look at Coinbase, it's at $2 under 19,000. If we look at something like BitMEX, it's at $10 under 19,000. So there's a little bit of a disparity. That's just a very quick piece of evidence, but you need to see this consistently over time, right? You want to see Bybit trading at a discount. You want to see FTX trading at a more compressed level than its current premium. It doesn't always have to be a discount. It could just be if the norms have been that FTX is trading at a $30 premium. Oh, into these pullbacks, we've been trading at a $10 premium. So this is the purpose of identifying norms, because it's not always, oh, positive number or negative number. No, it's, okay, on average, the positive number has been 27, and right now we've been stuck at, you know, a premium of $12 for the last 2 days. Okay, so we might not get a negative value, but I know that this is abnormal, right? It's a standard deviation outside of the average. So That's what we want to see. We want to see people betting that the trend is going to break, because ultimately you want to build up the short fuel to cause the squeeze upward. So the spot market hasn't gone anywhere. We've seen that the market has got heavy at the high. And, for these opportunities, I am willing to, I slept actually like a baby last night. And I woke up, you wake up at like 7 o'clock. This morning I woke up a little late. I wake up at like 7 o'clock in the morning and I'm like, oh, sweet. And then I get up and I go close my position, right? And then after that I got into three scalps right after that on the long and the short side. So I think I'm actually done trading for the day. But that's what's occurring, guys. You need to build up that it's sort of like this doubt, right? And when I say, the market tells you that it's bullish or bear, so someone's confidence tells you if they're long or short. And I hate to say that Twitter does represent the market, but put it this way, it doesn't, right? You have a completely new force in the market now, but you can say that sentence and also say that there is no other market where the Twitter participation is as representative of the underlying market as it is for Bitcoin or crypto. Okay, you don't have a large group of people in a group communicating more frequently with each other, directional cues in something like Apple, and in something like Tesla. You have complete fanatics or complete doubters, but you don't get this color the way that you do, I think, from retail, as you do in crypto. And crypto was first retail before institution. So when the market is, everyone is confident, you at least know everyone is long. Okay, if someone is a trader and they are really negative on the market for a week long, if I was to say, like, I'll give you, can you guess if this person is long or short? Would you say they were long? No, you'd probably say if they were doubtful that they were either out of the market sold or that they were currently short. So way too much confidence right now. It is totally a view of the psychology of market participants. So that's my opinion. Market is too long. It needs more of this slippery but controlled movement to the downside. And I think that's what we're seeing right now. So I just want to look at the lower time frame chart. So more recent structure. Okay. So I am focused on this little bit of the last 4 days that we have right here. Now, why am I focused on this? Okay, if you're looking at a price action chart, if we're looking at something like this, all we're looking at is the last 4 days, and you have this activity. So the last 3 days are inside of this reversal candle that occurred at the all-time high. So this is a good structure because it's compressing within itself. So at least from this, what you're getting is good trigger points. So I would say that if you're looking at trigger points from this, and you're going to say, okay, well, what discernible trigger points are there? So what we can see is that there's been a consistent low that's been put in, okay? And while you have the high at, you have the high for the entire structure, the daily close at 1972, I think that your more applicable high is still, it's that 19.4, I thought it was 19.3, it's like that 19.4, 19.45, it's between the highest daily close. And why is it between? What do I mean by that? Why isn't it the daily close? Because at this point, after you've had this compression, if you get a conviction move to the upside or back through this low, I think you're coming back down to, low 17s, mid 17s, okay, or you're getting the follow through upward. And this makes a bit more sense when you look at it on something like this. So if we go to this chart, so you see that on the 1, 2, 3, last 4 days, okay, we have these days inside of this entire day. So not only do we have those days inside of the entire day, we don't just focus on a candle, we have inside value, right? So 70% of the activity has actually occurred between this structure that is, this structure is an $800 range. So it's from 19.5 to, we'll say, 18.7. Now, if I compress these as a composite, you get a precise number, and it's not going to be that. But if you just extend this, right, you could see that most of our activity has been, relegated to this little pocket. And the one good thing that I'll say is, again, remember this, there has been really no absorption at the high. So what we just have is a market that is getting itself trapped in a corner, and a lot of my short-term trading is around this concept too, and this sometimes will just be on a single candle where I see the market get really heavy into location. So if you look at this structure, so we'll zoom this out a little bit. Okay, one sec. So if you look at this structure, what do we have? Over the last few days, the most of the volume has been up here, okay, then down here, then down here. So the volume has been more towards the high of the structure, okay. If we will compress this so to give you a better idea. So how do we compress this? All right, here we go. So I'm getting used to XO. So most of the volume has been at 19, 19,380, 19,4. So we're sitting, the more we sit below it, just it's an indication that shorts are just in better position, right? Longs got themselves crowded up here. And you sit below your VWAP, it's the same kind of concept. You're sitting below where most of the risk came in. So the one good thing that we're seeing in the last day is that we've cleared this low. So we took out yesterday's low, but we put in a good tail down there. So the market came into this low, and when you're looking at a TPO, it's where's the market being accepted, where's it being rejected. The thin area is just an indication that it was rejected, right? So the effort down has been rejected. Buyers did a good job of standing in. The one thing that you want to see is, okay, you have that sign, that's good. You have a buying tail. You have the market coming into a prior low, getting really, getting the fuck out of there really fast. And then you have most of the volume now at this low. So a good sign is, hey, can we keep the volume down here? Rather, it's not, keep it like you're making an effort to keep it down there, but can we leave the volume down here? So can we start trading back inside something like yesterday's value area? So back inside, which was above a previous imbalance right here, back above, 19.2. So back above 19.2, we're above that VWAP. And then you have a really good sign that has showed up in prior consolidations where the consolidation might start like this with most of the volume being at the high. You get heavy, you roll down, you have 1-2 days where most of the volume is caught then at the low, and then you're trading above something that looks like a base. So you look for a profile where most of the activity is at the low, and then the tell, or one of the tells, that this is going to act like a platform, or just one of the better signs, right? It's not a tell. Is that it's evidence, right? Is that, after you put in, let's say, another day with volume down here, that you're trading, 100 points above, 200 points above. And what that's showing you is the transition through time of where the risk was put on, okay? Volume is where risk is put on. Put it that way. You substantiate that by an increase in open interest. It's where battle was done. That's where blood was spilled. That's where risk was put on. And if buyers are trading above that, they won the battle. They're in control. They have a level of comfort that sellers don't. If you have most of the volume at the highs, so if you're looking at, and for those of you that want to replicate this on your TradingView chart, if you're looking at this on TradingView and you go on to session volume, if you have most of the volume at the high, so one day we migrated lower, but if you have most of it up here, so what I'll do is I'll get rid of this and we'll session this. So we'll session profile this. We will not visible range this. It is, if you pop out the visible range, you see the volume is all up there. So it actually accomplishes that. I was going to take the session in the same area. But if you have most of the volume here, if you got longs that got in up here and shorts that did, okay, who is now under fire? It's longs, right? If you entered here, when price is down here, if you're still in the trade, you're thinking, I hope it comes back there, right? I hope I could get out. You might act like the selling pressure up here, but you're certainly uncomfortable, right? The more it moves away, the more you're likely to do what? If you don't get stopped out, you're likely to flush your position. So you just want to see you're trading back above that buyers are in control. So we've seen this transition happen a majority of the times for this entire structure going back to March, where it's getting heavy at the high. It's not getting absorbed, right? So there hasn't been really any absorption until you go back to all the way at like 8K, 9K, where you're still under really significant resistance. So yeah, there was a ton of limit pressure at first, right? Before it got eaten through. But you haven't seen really any absorption in these structures. So if we look at, if I just go back to XO and we'll just, so it's in the, that's because it's in, let me close this layout. So if I go back to XO and I put this chart on, not this one, if we just look at Delta, so we'll back out, we're on BIMX right now. Let's get footprints, that session, clean this up. If we zoom out, there's no absorption at the highs, right? At these highs, there's no absorption. You don't have anything that says that, this is equal highs, basically, equal highs. Actually, a lower high over here, higher high. So when CVD is not moving up as much and price action is traveling farther or further, it just means that there's less ask pressure. It's an idea of where liquidity is and where it isn't. So market is thick over here, it's thin over here. But again, the thing that stands out is there's nothing of, you know, like, okay, equal high, and then you have something like CVD that's doing this, right? There's no heavier hand capturing this. This is literally the sum of all idiots right now getting overly leveraged at the high, and then the market, you know, tipping over on itself, right? That's all that's happening. You're building the structure the wrong way. You're building it from the top down. Okay, the trees don't, you know, come out of the sky and then grow down to the ground, right? They build from a really strong base. So that's what you need in a market. You need to create that selling pressure at the bottom. You need to create people that leave the market. So when they leave and they sell the bottom, they kind of cover by getting back into the market as soon as it rips back up. So that's what you create by building this base at the low, right, to a degree. But we don't see any absorption at the low, right, or at the high. We look at Bybit, same case, right? So you look at Bybit. This is like the new jungle for all the apes, right? So you look at Bybit. There's no signs of absorption at all, right? If anything, you have an unwind that's occurring, right? There's no sign of absorption though. So that's the one thing I would want to see. I would want to see, oh, we have a sign of absorption. Like, damn, this is you know, us coming in contact with you know, an immovable force, right? It's not laying off whatsoever. That's a wall right there. Whether it's an iceberg or whether it's, you know, advertised limit order, it's just not moving. And we're trying to make an effort. More buyers came in, less to show for it. So yeah, and yeah, so I just went on, right? But I do want to give you guys a chance to ask about some charts. So BTC and gold seem to test all-time high several weeks for confirmation of the break. Yeah, you know, the whole thing about this X factor is like, this was a big unknown, right? No one really, everyone, all we did is have plenty of time. So I feel like we did get gifted, right, with this opportunity for those of us that have been on the same boat for the last 3 months. We've all kind of been like, it's a long, it's clearly a long, buy dips, buy dips, buy dips. So for people who have kind of followed that simple method and stuck by that cardinal rule, then it has seemed like, okay, we're just going to the all-time high. Like, we're definitely getting there. It'll take a while, but keep the faith. We've all been on that boat almost, for the most part, most people. It has become an easy trade, but the major unknown was like, I think we're going to all-time high for sure, but best guess what happens when we hit it, right? Do we, you know, that's where your imagination gets away. You're like, oh, we're going to nuke up to 25. Oh my God, are we going to swing failure back down to 16? Big unknown, right? I think that what we can gauge from this is most positive signs being no absorption, no like crazy signs of, no signs of really any distribution by spot. Spot is holding up every dip now. So that is what you need to see, right? That's the underlying spot market. You do have a bunch of catalysts right now in traditional markets. Don't write it off. The fact that Ledger has that funny ass commercial is huge, okay? I did my part. I shared that on all my social media, okay? Just get it out there, plant seeds. That's the way things work. That's how things catch on. You know, you have to be sort of an advocate, you know, an activist investor and advocate for Bitcoin and crypto. But I think that it's clear that we just have to build up. We're going to be probably consolidating a little bit longer. That trigger, you know, now you have 1, 2, you have 3 at the high. You have this consolidation that's forming. After you consolidate like this, odds are, what have we done in consolidations like this in the past where you've had these tight consolidations? When you get a clear break through it, if you get a clear break right now, and just the highest trigger is probably not the one that pays the most, right? But the highest one is probably the one that's most certain. So I might be able to get involved sooner because I look at some, I guess, more nuanced details, right? A lot of people can do these too, right? They could find these, they could learn the same things that I've learned through time. But what I'm saying is that the most certainty probably comes around this daily close, right? If you break above, what is that level? If you break above the daily close around 19.7, if we make a hard move through that, that's probably the move, right? We're probably going further. Maybe we have a retest, but I wouldn't be fading that. I am willing to get right behind that. What I'm not certain about is, do we just spend a longer period of time doing something like this, right? Ranging in this larger structure over time. It wouldn't be crazy to do that. Like, we've done that before every time. So would it be crazy to assume that maybe this is something like this? No, I wouldn't, right? I mean, what have we seen over time is that these patterns have been roughly similar in the dynamics that have occurred between buyers and sellers, except this one has gotten a little bit quicker because there's a little bit more certainty, right? There's a lot more urgency to buy versus there was confident people over here longing into resistance. Now it's like this is clearly a long. So if you were to look at this structure, you might not say that this is a fractal of these are fractals of each other. But if you start to take context in, you could say, well, maybe this actually is. But this is just a higher high now because it is just a representation of a more optimistic, or it's weighing more activity, right? It's the same structure, but with more. It's like a balloon, right? If you drew an image on a balloon and you blew it up to a certain amount, that image would only get so large. The same image is left on the balloon. You add more air into it this time. It's the same image, right? You drew it, nothing changed, but this time it's going to be much bigger. So that's the way I think about how this pattern might be occurring. And maybe this is, just a longer pattern that the same way that this is higher and this is consolidating higher up, maybe instead of doing the whole sideways nonsense, this is just becoming like a vertical accumulation where you drift higher up, but for a long period of time before breaking upwards. So it could mean like maybe we just spend more time between 18.6 and 19.7, right? But those triggers, I think, are becoming pretty clear as of the last 4 days. So I don't think exhaustion is really an issue right now, trader Warren. The spot market still shows activity into the dips. This trend can end without absorption. Yeah, it sure can, right? It sure can. In the absence of no spot demand and no spot activity and no spot TWAP evidence, I would say that would probably be more of something that I would incline towards. But I don't see that right now. I have personally interacted with people right now that are just starting to get onboarded onto Coinbase. So yes, that doesn't mean much, but we're in a different stage right now. I would say that who knows where the top is, but I don't think that this is showing signs. So a reflexive asset is going to put in 99 times out of 100 a blow off top. 99 times out of 100. A reflexive asset with a really deep derivative line of derivative products is 99.9999 decimal repeating going to put in a blow off top. So we don't have a blow off top yet. Okay, we don't have a blow off top. And blow off top looks like this, right? Exhaustive move to the upside looks like this. We don't have that yet. We could have maybe you could have said, you might have been able to say we had a little bit earlier, right? If you were looking at, no, you can't actually. You can't say we've had a blow off top yet because we haven't. So it's not going to end until there is a major spill. That's just the way that most of these highly reflexive markets or assets work. So, please answer the exhaustion question, bro. All right, so I think you just saw that. Are you calling me Vro with a VRO? I'm just going to let you know, Trader Warren, I have a thing for making fun of like silly kind of colloquial broisms like that, even though you're saying bro and I know you mean bro. So if I jab you for saying Vro, it's because I'm actually making fun of you saying Vro. Okay, bro. Let's see. Wi-Fi. Yeah, is a correction of 14K on the table? Like everything's on the table. So I those questions too. It's like, what isn't on the table? This is the most reflexive asset there is. It is the most FOMO driven, the most fear driven. It's extremely technical. You lose a level, you go to the next kind of thing. It has a ridiculous ATR. It's got a greater degree of expected volatility per day. Can this go to 14K? Like, absolutely. Could it have gone from 10K to the 4,000 in just a matter of a couple weeks? It did that, right? It's done. This asset has been every form that it could possibly take, it's been in, right? So it's absolutely possible. I don't think of things like that. Like, is it possible is never the question. Is it probable? Well, that all depends, right? On balance of probabilities. Like, bruh. Does that mean you don't like bruh, bro? Yeah, I fucking hate that stuff, honestly. Yeah, I don't like that. No, it's not that I don't like it. I don't, it's not that I don't like it. I'm going to make fun of it. Like, I don't know. Maybe it's because I'm 35. Like, I'm wearing my hat backwards right now. Um, and like maybe that there's like things that I don't follow that are maybe traditionalist ways, but yeah, I make fun of stuff like that because I think it's yeah. So there are certain words that I'll use if I'm being condescending, like chief, or yeah, chief is a good one actually. Yeah, all right, chief. Um, but no, there's no like really hard feelings whatsoever. This is who I am. It's like breaking balls since I was born kind of thing. Come on, bro. All right. So let's look at Wi-Fi. I could have just gone to my DeFi thing. All right, so Wi-Fi, all of these pairs, Wi-Fi. I mean, let's just go to DeFi because comp is popping off. Comp just like pissing me off because I longed comp like 3 or 4 times over here, thinking I had the early entry, and I was just taking a little bit more risk for it. And then comp goes on to rip upward, right? I think that Wi-Fi is a stronger play for this entire bull market. As long as BTC remains on course, Wi-Fi is definitely going to remain on course. So if I look at, and I hate to say definitely, but like it's how I feel honestly, right? So I get into trades when I definitely feel like they're a good idea. So to a degree, I have a level of certainty, right? Otherwise, you're not going to take a trade. It's just being a human being. So right now we're seeing that, yeah, you have this break above this previous structure into this prior range. Treat it as support. You get that first test of support. Are we falling back within? Does falling back within this structure mean a whole lot? No, because this has been putting in a pretty tremendous move. It has put in a pretty tremendous reversal. So expect at this point Wi-Fi to consolidate. So I think that the most important level for Wi-Fi is this 22,476 level. So this daily close back down here. I wouldn't want to lose that. Right? I wouldn't want to lose Wi-Fi and start gaining any kind of acceptance back below this prior range into this prior wick. You look at that wick on the daily, it doesn't show a lot. You look at it on a few lower time frames, and yeah, there's a great degree of activity that took place down here that doesn't show up in that wick. But the idea is like, this is a really strong line of defense. Let's not go back and see how strong it is again. And, honestly, a trend like this, it should sort of maintain. If not, I don't really necessarily worry too much about the high being violated. It's like that's going to get messy at some point. Like trends are going to consolidate and form a range, and that means you're going to come back into a high at some point. So I think that this low is important. So if we do something like this, I'm not concerned whatsoever. It's like if we start to get a really high conviction daily close through here, then I would be worried. But I think that a lot of the times when you paint these hypotheticals, you have to acknowledge that like that occurs probably with a lot of other things occurring in concert as well. So if you have Wi-Fi closing back down under 20K, it's like, well, where the hell is everything else? It's probably already given you the signs that it's time to GTFO, right? Sushi. What do you mean, Gino? It's a shit coin. I tough guy chisel chest. So I'll look at Aave. Yeah, look at Aave. Aave is a position that I added in on the dip, and I've never been more rewarded for buying a shitcoin on the dip. But Aave is the same place as Wi-Fi, as SNX. I added to SNX too. I said I added, but that's unclear because I got out of SNX. So I added in the dip and I I tagged a new position on. But Aave, same thing as Wi-Fi, like blue chip. Going to outperform as long as Bitcoin and ETH continue to. Aave for me is like, don't break this low, right? Do you want Aave to come all the way back down here? No, but I'm not. So like, this is something I'm so beyond paying attention to on the low time frames because to me it's going to be in a longer term secular trend upward. So let's see. Shitcoin, like I was in sushi and I got out of this. I sold sushi at I think 231. So I got some shit because like first of all, someone said that I never said, I shared my sushi exit on Twitter, and someone typed like, yeah, nice how you never shared your entry. And I'm like, go back, fuckhead. Like, look at my Twitter. I mentioned this on November 30th or 31st. I'm getting into sushi. Um, there are some things that I will not share, like the screenshot of my MetaMask or my sushi, swap. I don't want anyone to see and be able to. I'm sure I could do this with and get rid of things, but in the heat of the moment, you could triangulate who someone is through their MetaMask, through their ETH activity, right, in DeFi. It's really simple to do. Look at what someone has said enough times with their positions, when they're getting in, do homework. You could probably do a pretty good job yourself of finding out who they are, especially if if they're dealing in large size. But sushi, I think that sushi is going to outperform as well. I got out of sushi. I talked about this on Cointelegraph too. People gave me shit. They're like, "Oh, this guy said he's in sushi. Like, this guy doesn't know what he's talking about. Why is he in sushi?" Like, fuck off, man. I got back in sushi because we reclaimed market structure in the opposite direction. And I mentioned this in BlockRoots. This was my long ride on sushi. The criteria was, okay, higher highs, higher lows. All right, we took out this low. That's bad. Okay, so the really good, if you have something really bad like that happen that would normally nullify or rather negate a setup, if you have that occur and then you suddenly are trading back on the other side of that, right? So if that's your trigger, if your trigger is like this low for the breakdown, right? If you're saying like, I want to get out on that, well, if you take that out and then you're trading back above it and respecting it, like, good sign, right? Really good sign. And then I'm looking at this higher time frame cluster back here. So if I label a target like that and I say, this is my target of targets, I'll gladly look back at the position upon a response, but in an altcoin, I'm going to get out. Like, if I have a target in front of me, I'm going to get out. I'm not going to assume that it's going to have price discovery until it's in price discovery, because you've just seen many times how these things get washed, right? They get stuck in a really shitty spin cycle. So I think that sushi looks good, but I just would rather accumulate sushi back down. I said 180. So I mentioned 180 on Twitter and on in BlockRoots. So anywhere down within this level, I'll look to pick up some longs in sushi. I just think that sushi, Wi-Fi, Aave, SNX again. I got back in SNX on this dip. It looks like it turned out really well for me because when I woke up this morning and I was like, ugh, okay, is this a good dip to get? Like, is this going to turn? Are we in a bad point? Is Bitcoin going to break down a little bit further? And then after closing out my Bitcoin short, I was like, all right, if I'm closing out my Bitcoin short, I'm implying that I think that Bitcoin is not going to nuke further. If I'm implying that Bitcoin is not going to nuke further, it's probably a good opportunity to enter in some good alts. So I think all this blue chip DeFi stuff is, one, it's correlated, and two, it's following Bitcoin. It's not being really negatively impacted by Bitcoin's positive price movements. Okay. What's up, Stan? What's going on, buddy? Any other decentralized exchanges? I mean, I use honestly, so my criteria for entering into DeFi is, one, it's the 2% depth is what I immediately look at. So if I'm going to get into DeFi, I don't really care to get into altcoins for, like, there's so many alts I could be in. I'm sure there are opportunities left and right, but like, do I want to, and I hope that all of you get to this point too, do I want to like tag on a small position in something for a small move? Like, to me, the ROI isn't there to like waste my time, do my homework for it, to not capture something that is substantial. So if I'm looking to get into an altcoin or a DeFi pair, like, I need to know that I could put some actual meat behind the position. So I need to be able to put some size on. When it comes to any of these pairs, so we'll look at like Aave. So I want to make sure that there's a good amount of depth, right? So 2% depth, it labels that right away. So if you go to like Binance right now, Aave versus BTC, 219,000, 100,000 to the upside. So there's more depth below us. Okay, it makes sense. The market is going to be skewed long across the board now. Like, people are not looking to sell as much as they're looking to buy. So I want to make sure that whatever is around the current price in that depth, even closer, even better, is adequate enough for me to market into, because most of these DeFi pairs I'm upping the gas and then I'm marketing into them, swapping them, right? I've been really taking advantage of MetaMask because I don't want to keep my money on an exchange. So I've been taking pairs that are adequate enough for me to ape into, and that I think will, after the cost of that, so I'm incorporating, all right, I'm getting some of my pairs that I've got into with really big positions, I'm slipping really large amounts. Like, if you, and this might be large to someone, small to another person, but if I put on a position, I'm slipping like immediately a couple $1,000s. Like that's a lot, right? Not, and just that's an arbitrary amount. Don't take that as if I'm talking about I'm slipping $1,000 in every position. But the point is, I am getting into position, knowing that that's going to occur, knowing that if you could get front run, right? Knowing all these things, that's all baked into the decision. So I better at this point be able to put on a large position and get out for an adequate amount of return. So there's a lot of calculation with regard to just making this decision. And when it comes to SNX, when it comes to Aave, when it comes to Wi-Fi, when it comes to even Comp, some of the larger blue chips, the benefit of them is not only they're correlated, not only do they have a great amount of tailwinds right now, but also they respect their technical levels, and you could also put size on them. So yeah, there are like altcoins left and right that are mooning for like a 4-hour period because it's someone shares on like a Telegram or something. But like I could look at it, let's go to like, what's one that we could think of right offhand? Badger DAO, trending search. Let's look at Badger DAO. It's number 800, so it's got to be shit. So Badger DAO right here. No idea what Badger DAO is, but look at this. Like 2% depth, $22. $2,000. I mean, if we go to like something like, I've seen this thrown around, Haka. So Haka, it was in, I put it in the newsletter. It's like something that's, hey, if you want to toss a little bit of money at this is good. Haka though, it's like 4% depth. That's on Uniswap, not 4%, $4,000 for 2% depth in both directions. Like, that's good to throw in the newsletter so that some of you can take advantage of things that they look like they're going to at some point be good. And it'll have more depth at some point. But do I necessarily want to like ape in a big position into that? No, I'll take a small position in Haka and like throw it away, and maybe it'll turn into a ridiculous return in a couple of years. But a lot of my decision to get involved in alts is based around that. All right, so API 3. Oh, that's for the exchange. What are their alts though, guys? I mean, right now, so I'm in SNX. Right now I'm in Aave still, not messing with that. Only one that I added on the dip instead of like getting in and out. BTC, I mean, if we're looking at BTC right now, it's showing the kind of signs that we want to see. So we want to see that, so here's an indication that the spot is trading at a considerable premium, right, into these moves. So that's exactly what we want to see into the move. The idea is like your futures are selling off, but your spot is more than happy to provide the bid, right? So over time, ideally you have something that occurs like this, right, where you have spot that's trading consistently above, okay, something, for the extremes, this is why these dips were so obvious, because it was spot led. This is why it was so easy to be confident back here. It's like, yeah, who the hell isn't confident? The spot market is buying all of this up. Like, they don't have leverage. They don't have to worry about liquidation. They're not sensitive, right? They have a bag to show for their position. It's like if things go wrong, they still have the BTC. They're not going to worry about getting, margin called. So this is looking like it is approaching a level of decency. Could this drop down to 8.4, back down to the high 7s? Yeah, but the point is, like, if that occurs, as long as we continue to see that it's futures unwinding and it's a spot market stepping in and it's controlled, right? There's an immediate response, then I'm not worried, right? Then I'm not really worried. RSR. Kava. So first things first, how's it doing against Bitcoin? I must have looked at this a while ago and saved the chart because my volume profile was still there with the volume on it, which is not something I normally look at. Yeah, I mean, not the most attractive chart. Looking at the weekly, how I normally define a structure for alts. I mean, these are your two most important levels on the chart, right? Highest weekly close, more recently, highest weekly close to the low. So this is like a good area to pay attention to a breakout. I mean, if you're looking at this on the daily, here's your mid. I wouldn't want to get involved in this, honestly, unless it did something like this. I don't know what RSR is, by the way. So this is against Bitcoin. So this is just showing you it's weak against Bitcoin. It's better to be in Bitcoin. Or something like this, which is like kind of like Rune, right? So above 129 or a break below 80 that reclaims. And then you're playing maybe back to have just first the mid and then the high. But this is kind of like Rune structure. It's like a W. So you have these clear weekly levels. So if you look on the weekly, so it's the same sort of consolidation range at the bottom, right? And then big impulse out, successfully retest. It's just onward, and it's just at that point leaving and being accepted. Even if you're late by a candle, you're expanding upward to at least the next target. So keep that in mind. But RSR versus USD, you know, it might look a little bit better, but it hasn't been outperforming BTC. So this is just showing you, you know, the upward progress against the dollar is there, but Bitcoin has actually been outperforming this anyway. So do you want to be in RSR that's less liquid, or do you want to be in the asset that's performing better and is more liquid and is more supported, right? It's just a little bit more weight, I think, to be in the asset that is performing better and has more liquidity. Let's see, Kava. Kava, we loved Kava back in the day. Let me just clean this up. Oh, this is DeFi. I already have, see, I'm adding things I already have on here. So Kava versus BTC. So the thing about Kava versus BTC, it's the same thing, right? We're back down at a weekly cluster. Could you see something form down here? And this would be a great spot to see it form, right? You have this support that it's treating as support. There was prior resistance, right? That goes way back. But consolidating here and then a break to the upside, I think that would be a clear bullish signal. But that needs to be, you know, what kind of criteria would I say would be important? Would it be necessarily the weekly level from here? So from 10,000? Or is it more like, all right, we should wait for these daily highs to be cleared? I'd say you want more acceptance with an alt. You want more from the alt. You don't want to just like require the bare minimal amount of confirmation or of evidence. So I think that you really want the daily closes above 10,695. That's against BTC first, right? So that's like, hey, I'm in the right thing, or should I be in Bitcoin? If you look at the USD chart, it's like, oh, this is an awesome retest, right? You know, you have this huge move through a level. This was one of the first ones in the newsletter. This thing ran ridiculously. People made a ton of money from the newsletter. And then you come back down and you're testing this technical support level. So it's holding. But it's holding now. It's probably, you could probably say it's like at the right time, right? Perfect timing, because, you know, if Bitcoin is now at the all-time high, we're getting a little bit more honesty from the alts. Like how are you going to behave when Bitcoin breaks the all-time high? How are you going to behave when we're close? So you're seeing from alts, like at least you get a view of how they're going to behave at these levels. Like if people have been sucked out of them, they're probably already out. The break of the all-time high probably pulls a little bit more. But if something is holding up, again, it could be underperforming BTC, but if the chart looks decent on USD, you know, that's a really good sign. So this is technical support. You would have looked back there. It's a big retracement, but alts do that all the time. And now you have this technical support level of prior. So if you just extend this general area forward, you'll see that this all lines up, right? So really it's loose, but you get the idea. Okay, resistance. So now, like, what is it? Let's say $2. You're above 2. That's a really good sign, because suddenly you're retaking this prior low, which you've already rolled down from now. So this is like the same thing when we talk about market profile, areas where the market has rejected. So you were rejected up here impulsively, big imbalance move, probably shook out a good amount of fearful longs. And now if you're back in here, it's like, who is going to do the job to sell this again? Are they going to sell it again? Probably not. You're probably going to break 2 and then move up to 250. And then at that point, where's the rest of the market? Everything's probably moving up as well. This is Agar. This is Agar, man. No, Matthew, I'm not building that swing short on BTC. I closed that short out at, so let me just look at, let's, hold on one sec. What I'll do is, I don't want to give too much of my personal away. So I'll look at my trades this morning. I was either in 3 or 4 before like 9 o'clock. I've closed everything out, by the way. So I've closed everything out. So if I didn't update that on Twitter, so pulling data. Data pulled, last 10 trades. So I was short last night from 19. So on average, it became 19,281. I think my initial entry was 19,291. I closed that short out this morning at 18,792. Okay. And then I got into a long at 18,856. I closed that out at 18,939. And then I got into a short at 1935, and I closed that out at 18,976. All right, so I ended up closing that out. So I still actually might have a long open then. Oh, no, I took the short in between. Sorry about that. Okay, so no, I'm completely flat right now, other than spot. But the last trade I took after that long, so this is why like I don't update. So I don't update my Twitter with every trade that I take, obviously, because the last 2 trades I took were, so the last 3 trades I took this morning, I actually made a killing off of, and the last 2, even though they're really small trades, so 18,856 to 18,939, and then the next one is, I'm like doing just mental math, they were like under $100 moves, but I was able to get into these without using a market order both ways, and for size, and I was taking advantage of a really short-term imbalance. So no, I'm not in any positions right now. How will trading change when a lot more institutions, billionaires get into Bitcoin? So yeah, as the prices rise, I just burped. I don't know if anyone could hear that. As the prices rise, over time, Bitcoin has logarithmic growth. So what that means is in the beginning, it's that super high speed growth, a lot of growth, and then it tapers off, right? So exponential growth is just, continues to increase at, it increases, it accelerates at an increasing rate. So logarithmic growth, that's what Bitcoin is doing. It's a logarithmic asset, I think, or it's growing logarithmically. Now, more money that comes into it, it's going to decrease volatility. At some point, like if you have like a $300,000, if you have like a $300,000 Bitcoin or $1 million Bitcoin, that thing is not going to move. It's going to be like a treasury, and it's going to move, right? It's just going to have a lot less volatility. You'll have a lot more stickiness to it. It'll be completely different if you get there, right? No one's saying that, but as the prices rise, volatility decreases. Okay, as the prices drop, volatility increases. This is also why you have to know, like, lower prices, those smaller moves are not the same. $100 move in Bitcoin for so here's the thing. If you trade traditional markets, you don't often have to feel this at all. You don't often have to know how it feels to have a period where a $100 trade is very meaningful and a $100 trade is not, right? You're trading Tesla, the odds are that you haven't really captured a $100 move either way, right? So with Bitcoin, if you have like a $5,000 Bitcoin, $100 is a much different percentage than if you have a $20,000 Bitcoin. The $100 is much different. So as prices rise, that percentage change is going to be smaller, and it's just things are going to be a lot less volatile. Period. So yeah. Yeah, so that's the thing, connected. And it might not even move a lot in money. Like you don't know how sticky the market's going to become at that point. If you have more people holding it, and your asset is that, price is that high, it's still a low float asset, but it's low float in that, there's only 21 million, but people are at the point of like a $300 Bitcoin. People owning a tenth of a Bitcoin are going to be like rare, right? I don't want to like this problem with that saying, like some people post things like if you own if you own 1 Bitcoin, you will be, have financial freedom. $300,000 is a lot of money, right? Let's just use that hypothetical still. That's a lot of money, but it's So this is actually, I'm not going to go into it because it could be life changing money to some people. It could be, a week's salary to others. But the point I was making is, let's see, what was the point I was making? Because now I'm going to forget it. Shit, I think I'm going to forget my point mid sentence. What was I saying, guys? Don't let me lose it. Don't let me lose it. Oh no. Oh, okay. Here's what I was saying. Um, People who hold a lot of Bitcoin will they'll be it'll there's less, you're seeing more of a supply shock as prices rise. So what that means is, the amount of Bitcoin left is decreasing for people to buy. So if you have a ton of people that come in and buy it, they're buying it in pieces at this point. And as time passes on, the people that have a lot of Bitcoin, they're just going to be, there'll be like any other representation in like a Pareto distribution, right? It'll be like the very few own the majority. So yeah, if you do have like one Bitcoin, if you own one Bitcoin and into the future, there's a Bitcoin that's on markets, on exchanges for 300,000, like odds are the transactions that are occurring on that, on, let's say you're looking at a DOM or a tape, you're not going to see like what you're seeing now where it's like a Bitcoin, 20 Bitcoins. You're not going to see that. You're going to see like, it'll be denominated in sats probably, right? Or broken down into dollars if it's still treated that way on traditional brokerage platforms instead of contracts. But, and if it's spot, then it is, right? If it's spot, it's going to be treated like sats. But you'll just see like very small exchange amounts, right? Instead of these very large amounts. No, it's not. Hey, it could be permanent retirement money if you put it in the right place. But where would you put it? You'd probably put it in Bitcoin. um, so, but we're like an hour and 41 minutes into this, guys. What I want to do though is I want to give away $100 because I said I was going to do that last stream. I actually forgot. And so how that works is I'm not going to give away $200 this stream because I just forgot last stream and no one even reminded me. So we're going to give away the $100 this stream. We'll just give away $100 the next one also. So for this stream, for giving away $100, I'm going to ask a question. And it'll just be a trivia question. The first person to answer it wins $100 in BTC. So now I have to think of the trivia question. It has to be somewhat unique. Okay. All right. What is, let's see. Okay, 1 second. Let's see. I'm thinking of something semi-unique but kind of simple. I was gonna ask one. I already asked what that one was. Give me 1 second. Like I have things I could ask, but they're probably too. I don't. I want it to be somewhat thoughtful. Shit. It's like I have. This is the worst because now I have like analysis paralysis with thinking about what I want to ask. Okay. All right. So let's see if anyone was paying attention in the stream. That's good. This is an easy one. So in terms of the differences between so why, okay, so this is good. I got it. All right. So I didn't want to just ask a question where you just give me a single answer. Why is it that sometimes that the CME exchange is why is it that sometimes that the CME exchange should be taken more seriously than looking at the trading volumes that are traded on maybe something like an FTX or a top 10 exchange? What is the difference on the CME exchange that makes it so that it might be deceiving as to what is actually being traded, but actually is the case? So what is the difference? There is something structurally that is different. So you might look at the CME and say, well, the CME doesn't have as much open interest. It's a very small amount of open interest, right? What is the difference, though, about the way that the CME is versus the way that something like BitMEX is or Phemex? No. Nope. Yes. Good stuff, Mute. Margin requirements. No. No. No, it was with regard to open interest. What is the difference as to why we don't why it should be taken more seriously? I was looking for margin requirements. So it was, why is it not maybe as representative as to what is going on behind the scenes? Yeah, so it's provide higher margin. So there are times when the CME open interest might be, it might be much lower than something like BitMEX, but the amount of, or even the amount of volume that's transacted, but the amount of capital at play is much greater because the CME requires, 33% versus the 1%. Cool. Good stuff. All right, Mute. No, these are all good answers, guys. It's good that you actually are paying attention. All right, buddy. So just send me your Bitcoin address on Discord, and I'll send you that over. But I think that covers it, guys. I think that covers it. What are we doing right now? Oh, making a move upward, huh? Decent, but I want to see that. I want to see that 1945 level now broken, just because most of the volume is up there. So other than that, that's just like a sticky point. Like you could come into that and still have trouble. All right, guys. It's been a pleasure. Everyone have a fantastic day. Everyone have a great weekend. And I will see you all on Monday.